Good evening and welcome to the Australian Stock Market Show. With sellers maintaining control and pushing the index down over 1.5% last week, will December now buck its historical positive trend and wind up in the red? Stay tuned as we'll discuss our thoughts on that shortly. We'll also take a look at the world stock markets, and for our main topic in tonight's show, we get into the top Australian stocks, ASX 200 Australian sectors to beat cash in 2025. First up, we'll share our hot stock tip for the week, so sit back and relax. Again, tonight is jam-packed as we have lots of emails to answer. We'll also take your phone calls and give you the answers to some of the most important questions around the market. Tonight we're excited to share our thoughts on some great stocks like Rio Tinto, Lynas Rare Earths, Woodside Energy, the major world markets and more. So get comfortable as we'll get into those soon. I'm Philip Tortevsky and I am your host for tonight, and joining me are two of Wealth Within's highly experienced analysts and professional traders, Janine Cox and Pedro Banales. And together we're Australia's most trusted stock market educators. Good evening, everybody.
Good evening.
I can see somebody got the memo for the Christmas happiness or cheer.
Yep, and I think you're the Grinch this year, aren't you?
Is that only?
I'm taking Dale's position.
Yeah, I thought I'd have to live up to Dale's spot. But how are we?
Yep, fantastic.
Yep.
Just can't stop hearing jingle bells and bring on the Santa rally, I say.
Yes, it's about time. The market needs to get going. But anyway, tonight, as mentioned, we get into the major world markets. But first, let's take a look at this week's hot stock tip. Now, Pedro, it's the last one for the year, mate.
Last one.
You've got your Santa hat on.
I do. Janine made me wear this, by the way. She's got a gun under the desk at the moment. So tonight, the hot stock is Monash IVF, ticker code MVF. So on your screen right now is market index. You can see that this is a stock in the healthcare sector, which we're going to talk about a little bit later, that what we expect for next year. Currently, the stock is up 1.83% today. It's got a dividend yield of 3.99. It is on the smaller market cap, which is, shouldn't be as a surprise, but it is above $1. So there you go, Janine. Might be one up your alley. So basically, it's IVF. It's in the human fertility services, and it's a provider of assisted reproductive services. So this is a space that is projected to grow, in the coming years. And if we look at the chart, I do have a little bit of information on that, which means that it's projected to grow to around 43.5 billion by 2033.
That's the market or the number of babies?
Yeah, well, we would hope so, right? Well, I think so, yeah.
They must be doing well.
Yeah, I was going to say the population growth is actually going...
It's going down.
So that's interesting.
And people having less kids now, is that?
Yes, that's right. And it could be for certain reasons. And that's why people are turning to IVF. And this is why I thought it was an interesting time to have a look at this stock. And from a technical point of view, if we open up the monthly chart, you can see here it's forming some quite interesting patterns. It first IPO'd back in 2014. And it's bounced off these levels that I've put on the chart here. And you can see that it does turn nicely at these levels, especially this one that I've got here, that at $1.40. But if we have a look from this low from COVID, it's really been trending up since that low. It's making consistently higher highs and higher lows. And then it's got this nice little falling pattern that you can see here, only to come out of it. And from that pattern, we have a growth of around 65%. So nice little profit there if you could have, gathered all of that uptrend. Now, what's interesting is that it's forming a very similar pattern. So whether it finds some support around this level that I've got here, which it has in the past, back here in 2015, and then it trends up, could be quite a possibility. If we go to the weekly chart and have a look, I'll just hide that information that I've got there. So then,
looks like nice support that you've got there at around $1.10, doesn't it?
That's right, and that's why I've marked that level, because it's a very important level for this stock, and we've got this downtrend going on here, which is not confirmed, but it could actually be finding some resistance and come back down. So that is the risk at the moment. It's one to keep an eye on, but it could be setting up for a nice entry soon.
So you're saying not just yet, almost ready, but
yeah. So you could say it's an almost hot stock tip.
The bun's in the oven, but it's not baked yet.
Exactly.
But sometimes it's nice to be, find these hot stock tips when you're early to the party, because that's when really you can line up that best risk-reward scenario, isn't it?
Yeah, that's right. Yeah, apply your analysis and get ready.
Look, the thing that I found interesting about it when you showed me, if we just go back to the monthly chart, is how it made some significant reversals around these lines, and it was the same sort of pattern. You identified these amazing little patterns here on the monthly chart, but it continues to do similar things when it peaks. So very repeatable, I think.
It is, yes, and quite interesting.
All right, there you have it. Babies for Pedro. That is it for our weekly hot stock tip. Well, shortly we will get into our topic for the night. But before we do, right now, it is your opportunity to get involved in the show and have your questions answered. Remember, we prioritise phone callers, so call now on 03 9290 9988, or you can text your question to the number on your screen. Now, the first caller in the show right now gets a free copy of Dale's book, Accelerate Your Wealth, and I'm a bit disappointed Janine's not putting a hand in there this week, but pick up your phone anyway and dial 03 9290 9988. Now, while you do that tonight, we will give you our thoughts on the major world markets, so let's get into it.
On your screen right now is a watch list of the major world markets, and we can see at the top of the list still we have Argentina. It's just incredible, 173%.
Unbelievable.
Wow.
Which is amazing, which dwarfs significantly the S&P 500 index at 27.34. We all thought that the US market was doing incredibly well to have gone up again this year. Maybe the Trump effect next year, some of the big banks out there are suggesting that the market could do in order of 9 or 10% next year. Goldman Sachs was one of those. So, they're always right, aren't they? So we're looking at the US market potentially in single or low double digits next year. The DAX index up this year, 21%. It's done incredibly well. And we're going to have a look at this market shortly. It looks a bit stretched to me at the moment. So it may be due for a little bit of a pullback, but further gains possible on that market. The Nikkei is actually up about 18%.
Another one that's done excellent this year. Yeah.
Have done reasonably well. We've got Spain, and then the Hang Seng is also 16% up. Have looking really good. The Dow, some of the big stocks on the US market have done well. There's been good reporting over in the US, so that's indication that there could be a good year for next year as well. But then it depends on who you read as to what their take is on the market. So just watch who you're reading and try to read across different commentary. And of course, make sure you listen to Phil. He's always got the word to say on that.
Well, considering you've asked me for a question now, what's interesting to me, and I want to get your thoughts on this, is, the Hang Seng was in the red pretty much all year, and now we're starting to see it in the green. The DAX was a slow burner up until recently it started to get going.
Yep.
We're seeing the majority of markets now approaching those double digits. I mean, is it safe to say 2025 we've pretty much entered a bull market globally, or is it still a bit early to say?
I think you're spot on. I think we might see a little bit of volatility in the first half and then another bull run towards the end of the year, I'd say.
See, expert comment.
There you go. There's more opportunities along the way, and it doesn't end there. The Shanghai Composite up 13.8%, looking well there. New Zealand is actually slightly ahead of Australia at the moment. This is showing me that, this has been held back, Australia, by the materials and energy sectors.
Yep.
So there's a lot of pent-up opportunity there. We're going to be talking about that tonight, so make sure you stay tuned. The FTSE's lagging behind quite significantly, but hey, if we go just and have a look at the DAX, as I mentioned before, we can see what we were discussing, this huge rise that we've just seen in the DAX 40. So above 20,000. Now I'm expecting that this market has still got further to go over the next couple of years, and possibly 23, 24,000 points is on the cards for this market. If you follow it, then you're probably pretty excited about that.
Wow. Doesn't that just prove, when you look at the DAX, I mean, we were talking off air, all the underlying issues Germany has with, the gas and they're big on the ESG green movement that's biting them quite heavily. But you see their stock price, their share market going through the roof. Very interesting stuff.
Yeah, it is. yeah, it just shows that the market doesn't always follow the economics. So.
Follow the charts and the
Exactly.
price. That's the message. But anyway, that is it for our thoughts on major world markets. Now, before we get into the first email, remember to get your questions answered live on air, you'll need to text or call into the show. You can also send your emails at info@wealthwithin.com.au and we'll answer them in next week's show. Now, let's get into our first question. Taylor asks, can I please have your thoughts on Eldoro Resources and if I should hang in there for the medium term? Now, Janine, he hasn't given us much here, Taylor, or she, but that would be nice if we had a bit more information. But I'm sure you're going to give us some advice. Obviously, they're in the stock at the moment.
I thought I was looking at a really concerning heart monitor, actually, looking at this one. We're going to have a look at the chart now and you'll see what I mean.
This is right up your alley, isn't it,
Oh,
Janine?
no, definitely not. Look, we're talking about 30 cents. So looking at the monthly chart, there's still upside to around 66.8 cents at the high there. So given it's run like it has, you know, I wouldn't be trying to get into this one now. But
if you're in it,
you just run with it. I mean, yeah, you would have to look at something, I think, on short-term daily chart, managing some of your capital, because if you've doubled or tripled your money, you don't want to see that turn and go the other way, which is quite easy to, you know, for these stocks to do at any time. But, you know, provided it stays above this low here on the 13th of December, I'd be pretty comfortable with that.
Has it gapped up, or has it just been a nice smooth run?
It's gapped at the bottom a little bit, but that's just, it was very sketchy at the bottom. It'd be good to see some volume on there, but it's looking much better obviously now over recent months. You know, it could do anything. It could go back above this high and keep going. You just have to watch it and manage the trade.
Yeah, Pedro, thoughts? I mean, if you're already in this trade, Taylor's in this one.
Yeah.
Is it a case of hold on, or is that volatility starting to get you thinking, hey, maybe time to take some off the table?
Well, I see a few options here. So I think that you could take some money off the table, and you know, you could have a couple of scenarios where the stock does keep moving on you and moving up to these levels up here, because we do have some resistance level up where it's currently that high, and you know, if it does keep rising and you miss out on a few dollars, well, then that's fair enough. At least you've taken your risk management and you actually have taken some money off the table. Now, if it does turn against you, then again, at least you've taken some money off the table and you've lowered your risk. However, you could hold on for the ride and then go all in or all out.
Now, I just want to dig in deeper on that, taking some money off the table, because, you know, it's one thing to take some off the table, but how much is enough? Are you taking off your initial capital and then saying, you know what, the rest is the profit, whatever will be, will be? At least you're playing with a free trade, or are you trying to say, actually, I'm going to take 50% off or 25% off a specific number?
Exactly right. So those are the two good options. So you could take out the money that you actually put in to play with, or you could actually just say half. I'm taking half of whatever it's worth at the moment.
Yeah, I agree.
And play with the rest.
You don't want to choose one?
It's because it's so...
I'd leave it to there.
But because of the nature of the stock, it's so illiquid. If you made a decent return on that, it'd be worth just taking some of it back, because the market can quickly turn on you.
Yeah.
You've got to be managing that risk all the time.
Especially if the liquidity on that stock is not great in terms of, you know,
exactly.
the
You might not
depth.
be able to get the price that you want.
Yeah, might go down just as quick. But anyway, great email. Thank you very much. Now, our next question is from Jimbo. I've heard the team mention that an increase in volume prior to a low can be a final flush out before the rise. For example, take a look at ARX on the week ending the 23rd of August. I'm thinking the flush out could be a combination of retail traders essentially giving up hope and institutional investors deciding the price is right and accumulating a large volume of stocks in a short period of time. All right, now I'm going to go to you on this one, Pedro, but that is an absolutely fantastic question, because it's trying to decipher the, I guess, the underlying relationship or the dynamic of what price is doing at certain levels. And we've spoken on this show, on other shows, so much about, you know, the amateurs buy at the top, the professionals and that sell at the bottom. That kind of is what I guess this email's speaking to, isn't it?
Yeah, definitely. We actually did a podcast about it, remember, on the top 10 myths, and one of them was that the market is against you, or the institutional investors are against you. So it's good to actually be looking at this volume and the price action involved with it. And we do teach that on the courses as part of one of the modules. So I'm sure that he has done one of our courses.
But is he right in saying that is what is happening at the moment? I mean, is that a common thing that happens? Is there a flush out happening with the example he's showing on the chart?
I would say yes, because we've actually outlined this volume here, and it does coincide with this huge down bar on the 23rd of August, like he's mentioned. So that was the lowest low of that period, and it's actually the lowest low in the stock's history. So that does look like a bit of a flush out. And then we've seen a gap up, a retest of that level, and then starting to trend back up again.
But let me ask you this, looking at that chart there, and I just had a quick gaze, as you can see, there are multiple occasions. Now, obviously that's the highest amount of volume at that point in time, but there are moments as that stock's falling that as it's falling, it would have looked like a flush out with high volume or the highest volume at that point in time, only for the stock to reverse up for a week or two and then continue to fall.
Yep.
So is it as crystal clear as long as you see high volume and the stock fall down, then that's considered a flush out? Or perhaps, trying that kind of strategy is a lot riskier, because I can see 3 or 4 examples of that. You might have thought it was.
It depends on the scenario. So if you're in the stock and tried to get in off the bottom here, I guess that's the risk with not allowing it to come back and test that low. The other side to that is that it might just trade sideways and then take off again. You just don't know which way these stocks are going to go at times, especially after they've been in these long-term declines, which is why you need to have back-tested this and made sure that you're comfortable. And look, when the stocks, I suppose you should go through it week by week, because as the stock fell away week ending 9th of August, it closed high. So as a trader, you're still thinking, okay, if the rule wasn't triggered, then okay, you're still holding it, it may just be coming back to test support. But then the second week when it came back, you'd be pretty concerned at this point, if not out, because the selling was just so strong. You'd be thinking it's going to take out this low. Now, I have seen situations where stocks have done that and then they've turned around and reversed the following week, because it's just the players in the market just testing that selling. And then the stock's turned around and gone up. So this is the thing. That's why rules are so important to have in place, so that you're not trying to second guess these types of stocks.
Yeah, fantastic advice. All right, well, that is it for our take on ARX. Let's now switch gears and take a deep dive into the ASX 200 sectors and uncover which ones will shine in 2025. Honing in on the hot areas of the market before they boom will have huge impacts on your portfolio. And this year we've seen how concentrated our market can be, with tech and financials running away from the rest of the pack. But will those feats be repeated in 2025, or will a new sector take the spotlight next year? We'll break all of this down to reveal the 4 Australian sectors with the strongest potential to leave a cash in the bank return trailing well behind. Now, the energy and material stocks have heavily lagged this year in terms of performance, which begs the question, are they primed for a major comeback in 2025? Now, Janine, what goes down must come up at some point.
Well, exactly, because what performed well in the previous year doesn't always perform well the following year, and that's the real conundrum. The tech may do well again, but maybe not as strong as what it's done in the past, and consider what's going to happen in the US there, because that will have a big influence. But the ones that have been underperforming, eventually the big funds are going to see that as an opportunity and be looking for the time to do that. We think that in 2025, in the second half particularly, that things will actually start to take off in that space. Materials and energy could even be earlier than that, depending on what happens with some of the big miners that we're watching, and one of them was Rio that we're going to take a look at tonight. So I think that people just have to sort of take a balanced view of the sectors and try to take some stocks out of a number of different sectors. And once the sectors give the signal that they're going in the right direction again, then just, maybe 2 or 3 stocks within one sector is quite a way to do it. But you definitely wouldn't be wanting to put yourself fully into cash in a bull market like this. Some of the stocks, as they trigger, sure, you sell them and you take some profits, or take the stop losses to protect your capital, because some stocks will still fall in this current market and fall away. How many people have been surprised at the material stocks that have been lagging?
Yes.
And they've hung on to them all this time.
But also, just as you showed that world markets list before, each of those markets, or 80-90% of them, are beating cash right now. And so the whole world, markets are outperforming cash. So leaving it in cash is a very, lagging type investment at the moment.
Yeah,
But
I mean,
anyway,
I guess you'd have to ask, well, what level would cash have to be compelling to leave it sitting there? That's the real
over
question.
7-8% at least. But anyway, some sectors delivered double-digit returns in 2025. As we mentioned, tech and financials were the notable ones. So will they provide the same outperformance again next year? And will they beat a cash return, Pedro? Now, I mean, you know, we mentioned they are standout performers. They have been.
Yep.
Can they repeat these huge numbers next year?
Oh, well, look, it's not likely. You know, I think that they're still going to do good in the coming years, but I don't think they're going to do these types of figures. I mean, we're going to get into what the watch list says for the year, especially with information technology. We're in the high double-digit growth. So I don't believe that they are going to do that next year, although they still will beat cash. You know, they're going to be sectors that the money's still flowing into. But I still, you know, I always like energy. I've been waiting for energy to come off those lows. Material sector, you know, I'm quite bullish on those. Yeah, I know, but it could be on the second half, like you mentioned.
Keeping it to the financials and tech, just quickly, I just want to ask, is it because there's some key fundamental drivers changing, or is it just that, hey, you know, at some point, as we know, the volatility runs out and it starts, you know, prices start overtaking valuations, and then, you know, you start to see it not make sense from some perspective? Is it more that rather than there being some seismic shifts in the financial sector or tech that are going to send it, you know, lagging? Yeah,
it's about that sector rotation and about those opportunity costs, you know. So you want to get in on the sectors that are lagging to get the most upside, you know, and it's about that risk, managing that risk. If the sector is already at all-time highs, whereas there's ones that have kind of lagged a little bit, which one would you want to be getting into? So.
Yeah, so what you're saying is you can still pick some good stocks that maybe the PEs are a bit lower in those sectors and try to get some growth out of those ones.
You definitely have to look at the stocks at the end of the day within the sectors.
Fantastic. All right, so when it comes to investors which are already holding stocks in some of these sectors that have performed very well this year, is the play to just keep holding into 2025, or should they be preparing to take profits? Now, I'm going to go to you on this one, Janine.
You've always got to be prepared to take some profits. That's number one, and have your rules ready. So now's a good time to start preparing. Your New Year's resolution should be to just have a look at your portfolio and get that right. Make sure you've got your rules in place and ready to go. It's not about just shifting over to cash at this point, because the stocks might come back. You go back and have a look at what happened prior to the GFC. So we're a few years out, 2 years, maybe 3 years out from the peak of the market that we think that is going to be a big one. And what happened prior to that in the GFC? What happened before the 87 crash? What happened before the peak in the early 70s or the late 60s? Same sort of thing. People thought it was never going to go on like it did before, but then the following couple of years to the peak, we had good returns. That can often happen at the top. Often we get that euphoric buying at the top that can drive some big returns at the end. So I would say just have the attitude of a complete open mind, and just it's managing the stocks in and out as you go, and watch out for the opportunities as we share them. Yeah, not just blatant selling just because they're up. But anyway, let's now take a closer look at all the sectors, and then we'll focus on 4 with the most potential to outperform cash in 2025. All right, Pedro, mate.
All right, that's what we've been waiting for.
Go
all right,
Santa.
Let's go get into the watch list. So, as I was saying before, information technology up, 50%, 50.8% this year. Financials, 32%. They've done phenomenal. And on the other end, we've got energy and materials, which have done the worst. So,
Financials, I mean, it's more about dependability, isn't it? So it was more about the reliability of that sector. We've seen some of the financial stocks, the PEs have gone up quite high, much higher than what we've seen in the past decade. Financials now, maybe there's a little bit of a pullback due, and then we're going to see another move back up. Some of them haven't even gone to their all-time highs.
Yeah, that's right. I mean, you've got ANZ, which I quite like, Westpac, which is looking good still. You've got CBA, who's that one's already run, trucking along. But really the question is, do they perform better in high inflationary environment with higher interest rates or with lower interest rates? So if we do get an interest rate cut, is that going to be bullish or bearish? That will slow them down. So it really does depend on that, what their growth is.
Exactly.
But, the energy and material story, we're dependent on other countries for that, really, and one of them is China. So if we see that China story coming back, our energy market, although you did say off air that China was developing.
Secrets.
Oh yeah, that's right. Maybe I shouldn't be saying this, but you made me wear the hat, so I'm going to tell them. China was developing some type of way to extract. That was the iron ore. But if they're trying to gain that independability towards that energy space, then they're going to try to obviously. Where's that going to lead Australia? Yeah.
Well, on that point, you've also got to add that they are moving heavily in the nuclear realm for their energy. So
no more coal.
Talking about going away and doing it.
Exactly.
They're going to be the world leaders.
And our energy market is heavily dependent on the coal and oil and gas. But gas has been going up, but our gas players haven't been. So
it'll be so interesting next year. All right, and also we looked at real estate had actually done well. The property sector, we're going to look at property after this, and we've got a few other good ones. So the ones that are lagging are the ones with potentially the biggest opportunity, except consumer staples, more of a plotter.
Yep, healthcare could be a good one as well.
So shall we have a look at one of the sectors then?
Yeah, let's have a look at the energy sector first. So this is basically the chart of Woodside, really. I mean, Woodside's in our top 20. It dominates this market, and it's been going down. So let's start off with the monthly chart, shall we? It's pointing down. It has closed below this low back in September 2024. It's come back to these levels here, where it could find some support and kind of trade around like these levels here.
Now what's
before taking
oil?
off?
So oil started.
Oil is down. Oil isn't doing very well. The demand story isn't there from China at the moment. They're turning more to electric vehicles. So it's not looking very good. We're really relying on our gas industry to ramp us up. Okay. Coal, if India...
The Australian government decided not to. I think they were going to ban, wasn't it, gas appliances in new homes, but now
I think they've reversed that.
Face on that one.
They have, yeah.
Well, they're charging. I spoke to a builder friend of mine yesterday, and now to get a gas line put in on new builds, you have to pay $2,000. Where previously it was free. So they're still making it very difficult to go the gas option.
Go the gas, yep. Yeah, but they want to export it.
So in terms of an expectation for when this could turn around, it's probably going to take people by surprise. Often when people talk doom and gloom about a particular area of the market, all of a sudden it turns around and then people think, well, what happened just then? It's already gone up 10, 20, 30%. So, but the real risk is it could fall all the way back to this sort of level, couldn't it, as part of that move? If it did, that would be an extremely strong level for the sector going forward. Ideally, I feel more comfortable for it to be down at that level.
Yeah, I'm still watching it.
So materials, I'm quietly excited about this, in spite of what is being said about what China's developed. Although we've got these three tops here now, so we just need to see whether the materials stocks are going to take out this low in September 2024. There's a strong level underneath all of that, approximately 14,000. If it comes back and finds support on that, it probably would have enough momentum to turn around and get going from there.
Even around the 15,000, I think.
Can I ask both of you, how much importance are you placing on that September low? Because that was the month where really the materials sector woke up, and it was on the back of that China stimulus news. Yep. We saw volatility like we hadn't seen previously over the last couple of months. If it holds that low, is that a telling sign?
That would be a great thing if it holds that low, but often institutions will use that news to offload stock.
Okay.
And so you see a bounce because everybody is euphoric thinking, oh, okay, this is it, it's going to turn now. And as I was saying before, a sector could rise 20, 30% off a bottom as the institutions are piling in, and people are thinking, well, half the gains already been lost from that range down. It had already gone more than half of the way up in 1 month, only to see it reverse. So you always wait for that confirmation, because this move up was a bit about speculation rather than confirming that the low was in, and the much stronger level is just below that.
So you're still not ultra bearish if it does take out that low?
I'd like to see the sector actually pull back to these sort of levels and take out that low, and then for the reversal to happen. It's much better to allow that to occur rather than for the pullback to be shorter, given the sideways move that we've seen over many months. I mean, from this high in 2021, and we saw our whole market went sideways for 3 years because of this, and financials at the same time, but eventually it will follow.
Yep. Okay, so
right.
now we've got the healthcare sector.
Healthcare is one that we're excited about.
Yes.
It looks lovely on this chart, the pullback that we've seen into this low in October 2023 and the rise out of that to test this resistance at around 44,800, 45,000. We've seen a burst out of that in July 2024, but it's just tracking sideways at the moment to test support again. So if the low in November 2024 holds up into the first quarter of next year and we get through reporting season, then we could see a reversal above this high in August 2024. That would signal, look out, we're going to take off. It could even do it sooner than that, just looking at how things are shaping up at the moment, but it would need to go through that high.
Yeah, and I do like the rise that it's done since this low back in October 2023. It looks different from the other rises that it has done in the past. So from March 2021 and this low over here back in June 2022, it looks much different now. It looks more orderly, higher highs and higher lows.
Well, Cochlear has been pulling back. That's going to provide opportunities. It may come back a bit further yet. We'll just watch that one. Sonic Healthcare is looking good. ResMed's been doing incredibly well. CSL's been holding things back, so there's still opportunity there.
Oh yeah, and in a sector where in the US it's getting, you know, that health tech space is getting
a lot of money spent there.
Biotech.
The most amount of capital going in, then you've got the ageing population over the top. It's one to watch for sure.
Definitely.
We got the last one?
Yes, and so look, the last one is all about property. Now, what's interesting about this sector is how we've got these highs here. February 2020, repeated again, finding resistance in late 20 or early 2022. Again here, we've got a sideways move from March 2024. It looks like it's broken out, coming back to test this now.
Oh, got to love those moves, right?
Yeah, we've got to love these moves. So looking at what happened prior to the GFC, there was a 50% gain in these property stocks into the high. So this is generally what you expect to see, a bit of a ramp up into the high of most sectors. And 48% back to that high, so there's still plenty of upside in this space. So,
for me, this one looks really good.
You like that one?
Yeah.
This is predominantly commercial, isn't it? REITs you're talking.
Yeah, we're talking REITs. We're talking all the property trusts like Stockland, Mirvac, GMG, GPT, big names.
Did you want to say something quickly on this?
No, I like it, and I think Janine's covered it off nicely. That previous resistance level here, broke out of it, found support. It could be trading back up, 48%, looking good.
All right, fantastic. Now for the good stuff, stock time. I'm sure you've got some...
Rubbing our hands together.
Yeah.
I just couldn't fit enough in. I could put 20 stocks on this list. All right, so shall we have a look at Rio now? Ideally, as we said, we'd like this sector to pull back, but if Rio gets going above these highs, in the short term, then we're on for a boom. The rest of the boom phase will be starting, and look to these stocks to mark that next phase. We've seen the financials, we've seen tech take off, we know the other sectors will eventually take off, but it's just a timing thing now and about being really patient and just watching what's going on. At the moment, it's just holding there. Some brokers were talking FMG down, they're trying to talk it down to $17. We were saying on the show, I think last week or the week before, that we thought FMG could be a little bit of a risk to the downside, so it was interesting to see those comments coming out. I like this stock long term. What about yourself?
Yeah,
Rio.
I really like the stock. I mean, I can't look at the chart, but to me it looks very much, obviously it's in that big, huge accumulation period. And if you compare that to what the index was doing, you know, from 2020 to 2024, these big patterns that you see when markets or stocks, big stocks like that go sideways, at some point they're going to break out into trend. And when they do, and you're talking about a stock that makes up a huge portion of our market, I think you need to be watching this one for you know, clues about where the market's going next. But we've got another one, don't we?
We do.
Yes, LYC. So we've got Linus. We've discussed this one a couple of weeks back actually, and now it looks like it's trending down. It is going back to these levels here, but around that $6 level. I think it's still okay as long as it does hold up above.
We're talking about a stock that, if it does turn around, has got potential.
It does.
What's the potential for Linus if it turns around and goes back up, if it does hold?
If it does hold, and that's what I mean, that if it does hold around these levels here, and then it provides an entry, we could be seeing a nice, you know, if you were to get in around those levels, we could be seeing a 90% rise. So again, with the fundamental story of this one, the fact that China is now cutting all the exports to America because they're in kind of this trade war at the moment. So are they going to look to us to get those resources. So this actually is the biggest player in the rare earth materials.
Well, it could be a takeover target. That's another thing to think about.
Yep.
But
possible.
look, I didn't like it, this pullback that's happening now. But, you know...
I was waiting for the moment you two would start disagreeing.
No, because I said that on another show. So people will be thinking, well, why are you putting it up, you know, on this one? But it's just the upside potential that we looked at on the chart if it does turn around. So it could provide some really nice returns.
Yeah.
Thanks, Phil.
All right, so in other words, Pedro was right.
We have to be merry and happy and jolly, don't we?
You do.
Pedro wore the hat.
You have to agree.
So
you
You've got to give him something.
Yeah, that's right.
Now, just quickly going back to the chart, just wanted to highlight that this trend, momentum line could provide some support. So keep an eye on this space here.
All right, next one.
All right, next one. We don't want to disappoint people. We've got to include, especially Pedro, we have to include Woodside in that because it's the big player in that energy space.
Yeah.
At the moment, though, there's not too much love coming there for Woodside, given it's still pushing lower. So as Pedro said before, when he's talking about the sector, we may still see some further downside, and it could go as much as $20 as the real risk at the moment, given it's pushing lower.
Yep.
But we'll just watch and wait and see what happens because Woodside's an amazing stock. I think the interesting thing with a lot of these energy stocks, when they do eventually find support and start turning around, people who are interested in investing in this space will find stocks with big juicy dividends as well.
Yeah.
So it won't be just about the short-term capital opportunity when the bottom comes in, it will be about a big dividend as well.
Well, that might be part of the catalyst to get people interested.
Sure,
Yeah.
definitely.
And if we go back to the chart, I just wanted to highlight something that's quite interesting is back here in 2014, this moved down 46%. It looks very similar to what it's doing now, right?
It does.
So if it does repeat that, then we could be seeing a rise when it eventually turns, a rise of 67%. So how much do we have now down from this peak at the moment? We've got around that 40%. So that level that you've highlighted, it's pretty close. So if it does do that 47%, that's looking close. And it's that $20 level is looking like the one to go to.
You're not just a pretty face in a Santa hat, are you?
No, much more.
For someone looking,
at least I'm a pretty face.
I'll keep it serious for a second. For someone looking to invest in a stock like this, because when you look at the chart long term, it can't get its head above $40, right? So if you've got that mindset, long term investor, you're probably looking at a nice yield. You're thinking it's undervalued or cheap. Probably not a good idea to set expectations so high, thinking this is going to break through to new all-time highs until it gets through that $40, or are you thinking, hey, you know what, pick it up and ride this long-term with the turn in energy?
I'd be happy to pick it up, when it eventually turns. Yep.
See how I did that?
I
got a little
baiting.
Bit of back and forth.
Wait.
Don't wait. Wait until it goes to that $20 level, see what it does, but I'd be happy to pick it up down at those levels.
Okay.
All right then. Let's look at the next one. This is Viva Energy, and I really like how this stock has trended beautifully up. And the pullback's nice and orderly. It's come back to a really important level for the stock. We just need to see it find some support. Sometimes when we're looking at charts, we like things to be a little bit perfect, and that is too perfect at the moment.
Ooh, yeah.
And then if we put a nice trend line down there from the top, we can see the angle of that trend is just beautiful coming down in there.
Yep.
So I can see some short-term resistance just in the lower part of that chart there. It needs to jump through that. Could be a good one. I'd say this is probably my favourite at the moment of the energy side anyway.
Yeah, I mean, considering looking at
so
that chart.
So you can have Woodside, mate.
Oh, come on. After seeing this one, I'm not quite sure.
But it's so interesting because the character of this stock, Viva, was so clean, higher highs, higher lows, real uniform trend, and then it's had this huge sell-off.
Yep.
Like, that spells opportunity.
The only concern, if you get back to the chart, would be that you don't have much data to backtest on. So I like that you've put this downtrend line. Yes, thank you. You've put this downtrend line, and you could have a rule that, if it does break up above this downtrend line, above this resistance level, but has it worked in the past?
Yeah, you're saying do your backtesting.
Do your backtesting. You could probably get a few trend lines down there, but the data's just not there. But I do like it. I like the pattern that it's forming.
Fantastic.
I know that someone that I've been working on patterns with recently will be saying, I can see lots of patterns in there and I can trade it on back testing on patterns. It just just to drive me crazy, okay? So just always remember it's got to be black and white if you're going to back test it.
Yes.
All right,
point.
next one. YAL. We can see there Yancoal Australia. Look at that. It's incredible, isn't it? But is it coming off on the other side of the run, or is this the start of a new one? That's the real question, isn't it?
A lot of indecision there, isn't there?
It is, especially with this big sell-off here. I mean, was that overblown, or, you know, it's recovered to almost that part of the run, a nice little pattern. If we expand up the chart, we can see this nice little consolidation. Now, that's a beautiful pattern if anyone wants to look at one. You know, you can see it's nice and simple, it's repeatable, and it's and if it breaks out of that, then there's an opportunity. If it breaks out to the downside, then you know that this low here is more likely to be threatened and the stock could come back. Probably a little bit toppy around these highs here, but if this stock gets going and it heads back above this all-time high, it could go anywhere, really.
Yeah, definitely. And I think this is reflective of the coal market in general. You know, 1 minute they're trying to shut down coal plants, next minute they're opening them back up. You know,
Yes,
one minute the EV revolution isn't here, then it is. So I think that most of these moves are relying on that news. You know, suddenly, you know, it's going up because coal's back in play, and then suddenly something comes out and it's not in play anymore. So I think keep an eye on the whole coal space, you know, as a whole. But I do like this pattern that you've outlined here. I'm not sure if you can get these patterns in its earlier moves, maybe over here somewhere.
You know, if the market says that okay, we're now bullish, and we were talking about that before, we've gone into this bull phase, and all of a sudden everything starts to take off again, we need to see the banks pull back a little bit, and then they make their move up. A bit more certainty about interest rates is going to be important as well. But once all of that happens and everything takes off, even stocks like this, where it's Woodside, where there's a question mark over the future, are still going to take off at that point.
Yeah. But I mean, you mentioned earlier, you know, sometimes when you do hear about things taking off, they're already up 20, 30%, and then it starts to come out, hey, oh, this is looking good. In the case of Yancoal, is it better to consistently watch this chart? Because like you've said, you know, it's had that huge dip. Really, the following week, it couldn't go on with it, so there's a clue there. The buyers have picked that up.
Yeah.
If you waited to hear something about Yancoal, you've probably already missed the boat.
Good point. I mean, that's why I guess we have our watch lists, and you just colour code them and say, okay, we're going to move this to, this is not hot right now, but it could be in 4 to 6 weeks' time. So you've just got to manage that list and not be looking at everything all at once. That's really what you're saying, but still have it on your list.
Particularly stocks with that huge volatility. You don't want to miss the boat on them. But anyway, thanks for that, team. Now stay with us, as we'll be right back after this short break. This week on Talking Wealth.
Join Rob Sherwood to discover why Australia's energy transition is leading to investment growth.
This is, as far as I understand, unique to Australia. There is a national market for buying and selling electricity. If you go to AEMO's website right now, you can see the going rate for a megawatt hour. A battery allows you to buy a futures contract on electricity. You can buy low and sell high.
Join Pascal Halliamore and discover 4 superannuation secrets for your success.
Do you know that through your super, you can become a millionaire? It's entirely possible. It is the greatest form of long-term saving that we can enjoy, and the government has done a fantastic job to make it as appealing as possible.
Pedro and I discuss whether QBE is presenting a strong buying opportunity despite its recent legal battles. The stock literally has gone up over 20% in a straight line.
Just say you were to take an entry around that $19 level, we've got about that 80% upside.
You know, it's not going to be long before the market realises, hey, if QBE is in such a good shape, it's trading at a huge discount at the moment. We should be looking at picking this one up.
Get your free 7-day trial now to watch this and more.
Only on Talking Wealth. All that and more only on Talking Wealth. Now moving on, if you want to talk about a stock or ask a question, pick up your phone right now and give us a call on 03 9290 9988. That's 03 9290 9988, or you can text the number on your screen. Now whilst we wait for your call, let's get into our next email. Damien asks, can I please get your opinion on QPM? I think now is a good time to buy, as it looks like it has found its bottom and is beginning to trend upwards. If it goes above 0.5 cent, it will clear recent resistance, and it has a gap to fill in August 2023. All right, Jenny, I know how much you love stocks under a cent. This is not even 1 cent.
This is Christmas. Don't do this to me.
Shed some
Half a
light on
cent.
us.
It's driving me crazy. All right. Right, this is highly risky business. Have you seen that movie? This is definitely one of those. And you can see this high here, 3rd of May 2024. It's come right up there. Could you buy now? I don't know. I think the stock's telling you something about this high as being as resistance level for the move up. But, you know, it does look good on the monthly at the moment. It's trying to come off that low, dare I say. It does look a bit, you know, it looks interesting. I prefer to see some sort of consolidation, and I would even go so far as to go back and have a look at what it's doing here. See how it went sideways for 3 months. That's sort of a slowdown and a bit of a sideways action, and then the breakout from that is usually a really good way of picking some of these smaller stock, you know, the takeoffs from small stocks. So are we seeing that yet? No, we're starting to see a bit of consolidation. We've had 3 weeks where it's trading sideways between that zone. It could just continue to do that in the short term, but, you know, I wouldn't be buying this one. But if, you know, you're asking me where, could you buy above half a cent? I'd say that's probably a better line in the sand. And ideally, if a consolidation comes and then it takes off through that high, that's even better still.
Yeah.
You're the Specky King, mate.
Yeah, mate. Oh, this one even makes me, you know, quiver a little bit. But
excited or?
No, not really.
Oh.
So if this was maybe a higher cap stock, I would like, you know, I think that I'd be looking at it, because if you have a look at the monthly chart, it is looking quite nice. So since it's a lower cap and it looks very, very small cap, there's a lot more danger in entering at these lows. And look what it's done back here. So it has gone up, you know, in order of 60% back there, and now it's only up, it's up around that 100%. You know, it could come down. At these levels, these percentages, as you can see, get higher. So you are risking more and more money, and it is more volatile. However, I do like the fact that the volume is actually starting to trend up, you know, as it's moving up into these highs. But again, as Janine said, I wouldn't be happy entering until it's past that 1 cent level at least, and then comes
cents?
back. Is it? No, I think that's 1 cent.
Oh my gosh.
Yeah, even worse, right?
It's just pounding right now.
That's what I mean.
Trading this thing? I mean, it's really risky, isn't it?
It's risky.
I mean, how do you even get a position?
Look,
you know, if you're playing with $1,000, you might be able to get in. But if you try to put in more than that, you're probably going to be struggling to even get filled at the price you want.
That's the answer. You said it perfectly. Playing this kind of stock, we actually had a look at the depth on this one. It's not the worst. I mean, you know, it's got a good spread on it. Yeah. But if you're trying to go in with some decent size, then stay away, because you're not going to get
So would
filled.
you just build your position up as it goes up then?
But then there's also that risk if you want to get out. If you've got a big position, are you going to be able to get that out in one go, which you probably won't. So it's probably a stock that you accept
you have
the
to
fact.
have a plan of how you're going to offload it. Don't you?
And you just accept the fact that, hey, I'm just going to allocate a small portion to this one because that's all it allows, and play with that small portion and see what the stock delivers for you. But we do now have a text. Before we get to the text, we just want to say the team have got their Santa hats on. We haven't had a call tonight, so please, if you want to talk about a stock, just ring in and give us a call. We'd love to hear from you. But going back to the text from Daryl, aka Huru, who is asking, don't own PPE, looking at $1.03 with some good volume. Stop loss would be close to 90 cents. Has a good base and structure with higher lows and higher highs and improving sound fundamentals. All right, now sounds like Daryl knows what he's talking about. PPE.
PPE, it looks actually much like the stock that we just had a look at.
So I actually think it looks better.
Yeah, it does look better. It's higher. It's almost at $1. And it's coming off that base. So let's expand out the chart and have a look at what's going on. And it's probably better to start with the weekly chart, right, instead of this monthly chart, because it's going to show you a bit more of the price action. We can see that going back to, I forgot whose question it was last time about the blow-off.
Oh, yeah.
So we have a look at what's happened here. So back there, you would have thought that was a blow-off because we had that high volume. And as you rightly said, Phil, that it's not always going to be the case, because in this case, it actually kept on trending down.
Thank you, mate.
So, I'll give you that one.
I'll fix you up with 50 after the show.
Yeah, no worries. Maybe a new Santa hat.
Are you sweating a little?
Yeah, exactly. maybe a summer hat. So anyway, it does look like it's maybe finding some support. So we've got the low here at 70 cents, low at almost 70 cents as well. Just put a horizontal line to mark that, and it's found some support several weeks now around that level. Then it didn't quite come back to that level and actually got rejected and came back up.
So it's a good thing.
It's a good thing, exactly. So the next one to beat is this level here, which is around $1. Exactly, $1.
I love it. Love now.
Yeah, his comment was
it's so technical.
He mentioned entry at $1.05, I believe, above $1.05,
above
and a
$1.05.
stop loss at 90 cents.
So where's $1.05? Is it above this bar here?
It'll be above that previous high, I think.
$1.03.
$1.03. So maybe just.
I'm not quite sure of his.
So $1.05 entry and 90 cents stop loss. Is that too tight or is that okay?
That's okay.
90, yeah, I would say that's okay. And he mentioned the gap as well, right? Back here on the 23rd of Feb. So if it does go up to fill that gap, if you get up around that $1.05, $1.05 is around there. You got that 20% up to that level.
That's
there.
not enough for me for a stock like that, though. I mean, if you're going to trade something like this, you'd want to be pretty confident about it getting to that high that you've just identified.
Yes, that high.
You have to allow it to turn around and then pull back to give you an exit. So, you need a bit of room for it to move, don't you?
Yeah. All right. Well, there you have it. Some good advice there for Daryl. We do now have another text from Liam, who is asking our thoughts on SDR SiteMinder. It's been growing recently and it looks good. However, I'm interested to see your thoughts regarding the stock entering the holidays. They are active in the hotel and small accommodation management, so I thought the holidays may seem more traction for them. All right, Pedro.
Good thoughts.
SiteMinder.
Yeah.
What do you think?
SiteMinder, I just had a quick look at the chart and I like it. It's making consistently higher highs. It's had this period of accumulation back here and it's actually shot off back in September 2024 and it's come back to retest those highs recently. So what's this bar doing at the moment? It's actually closing on the high. So, this one could be seeing a sustained uptrend pretty soon, as long as it gets above these levels here, which is around the.
But if it keeps falling, where could it come
$7?
down to find support?
If it does keep falling, then we're looking at these levels here. So that would be around that $5 level. And interestingly, that's a $7 level. It could be going in dollar increments.
Okay.
So you got that $5, $6, $7. I'd be looking at those levels there.
Now, I'll get your thoughts on this one, Janine. It's in the hotel space, leisure, cost of living crisis. Leisure's the first thing that goes out the window.
Well, that's true, but I mean, what's happening in retail at the moment? And we're going to be talking about that after the break. So
Yes.
People are still spending.
Yes.
So therefore, the chart is telling you whether it's good, bad, or ugly. And Pedro likes it, so I have to like it a little bit. And I'm seeing it. It's tracking and it's finding support. So
Yep.
I just don't like this look of the monthly chart at the moment. It just looks a little bit unfinished, and until it gets through that high, we really won't know whether it's going to keep going on. But everything's going to rise with the tide, so we'll see it eventually move up, won't we?
And is it more of a short to medium term type proposition or more long term, given, it's not too far off that all-time high?
I'd be going medium,
Okay.
short to medium.
Yep.
I wouldn't probably hold it long term. I'd be more of a medium to short.
So just try and
Yep,
find
that's wise.
Just
a
try
good
to
risk
find-
reward in that range.
Yeah, that's it. Maybe a year max.
All right, fantastic. Now our next email comes from Jack. A mate of mine put $150 into Bitcoin a couple of years ago, and it's now worth $1,500. I always brushed it off, as being more of a scam type stock, but now I'm wondering if I should put my money in it. All right, Janine.
A bit of FOMO there, I think.
Bitcoin,
FOMO, be careful of that. It's really a danger to get stuck in. Looking at the chart right now, we're expecting that it's $100, right? Okay, so it's around that whole number. It's a psychological level for it. I think between 100 and 120 is probably where it's going to go. It just looks stretched right now. We need to see a pullback to gauge what the potential is going forward. It's sort of in no man's land. It's like climbing that wall of worry. That's what we call it when these big blow-offs happen and the stock just keeps rising up without a trough or market, whichever one you're looking at. It doesn't really matter whether it's a stock, currency, commodity or a Bitcoin, same sort of thing. So you know, it's actually run, looking at these rises here, if we go and have a look at what happened, it went up, about 180% there from that low. And from the recent low down here in August 2024, it's 115, 116%. Could it repeat the same length? Possibly, but probably unlikely without a pullback along the way.
How important is, now we spoke before about, and this is the theme, it just happened that way tonight, about, you know, blow-offs happening on the downside, accompanied by high volume. Now you look at that Bitcoin chart, right now we're seeing some of the highest volume it's ever had, and it's happening on this euphoric run on the way up. Now blow-offs don't only happen on the way down, because as we've said, the amateurs buy at the top and they sell at the bottom, which means that's where, you know, a whole chunk of volume is going to come through. Is that what we're seeing right now with Bitcoin? Because volume's rising and the thing looks more vertical than,
yeah, well, you're exactly right. You've hit the nail on the head. We tend to see a lot of the punters try to get in when they've heard everybody else making money off it. And now we just need to watch the volume go the other way, because it will do that at some point.
Yeah, this is the most dangerous time to get into.
So not a good time to get in right now?
Not at the moment.
Not from our point of view, but I mean, if he does choose to buy something, make sure you've got a good stop loss.
Yeah, fantastic. All right, Jack, now we do have a caller on the line. Thanks for calling in. Welcome to the Australian Stock Market Show. Who have we got on the line?
Hey guys, this is Dom.
Dom, thanks for calling in. What's your question for us today?
It's in regards to BPT, that's Beach Energy Limited. I saw it come off its previous, I guess, kind of pattern, broken off $1.34, and I thought it's a good buy from there. And I'm looking at a stop loss at about $1.20 on this one. I just wanted to get your thoughts on this.
All right, fantastic. Now, is this just more for a short-term trade for yourself, or something you're looking to put in your super long-term?
I would say maybe medium to long term.
All right, fantastic. Thank you very much, Dom, and Merry Christmas to you. Thank you for calling in. Now, Pedro, I'm going to go to you on this one. Beach Energy, love it.
Yeah, you love it. I might have to disagree with that one. Now, let's go to the chart so we can have a look at what's going on. And really, this is such a volatile stock. And I didn't hear whether he wanted to for long term.
Sorry, so he mentioned medium to long term. It's broken out of a pattern. He got in at around $1.34, and there's a stop around $1.20. So he's taken it on the break of the pattern.
Ooh, okay, well look, I actually don't mind what he's done here.
You're changing your tune now.
Well, for a short term trade, yes, because you know, I think that it might be coming up to fill that gap.
Well, he's not trying to pick it off the bottom. That's the smart thing.
That's the smart thing. He's waited for this continuation. But you know, it is like overall, it's a very volatile stock. You know, so you know, around these levels here, that's where you're going to hit the major resistance, and it's already past this other resistance
before that,
level.
even around 170 or somewhere there could be high resistance.
You're going to get high resistance like in multiple places, but these are the major points here. And what I do like is that it has surpassed this level here, but I wouldn't be, you know, wanting to hold this for a long term, maybe a short term proposition.
If that goes up to $1.80 or what have you, I mean, if he stops at 120, that's a fantastic risk reward he's going to get. That's going to come out a nice trade, isn't it?
His stop.
Well, he's got to trail it up then, doesn't he?
He does. So his stop is at 120.
Yeah.
That's around 10%. Okay, yep. Well, that's a good risk to reward ratio, isn't it? Yeah.
All right. The team seems to like it. Thank you very much, Dom. We do now have another caller on the line. Welcome to the Australian Stock Market Show. Who have we got on the line?
G'day, Phil. That's Peter here, mate. Merry Christmas, guys.
Merry Christmas, Peter. Thanks for calling in, mate. What's your question for us today?
Regis Resources. I bought in the other day for $2, last week for $2.82, and just want to see what your thoughts were on that one going forward. Seems to have cleared some pretty good resistance and gone up, so I just want to see what you guys think. That was all.
Absolutely, mate. And have you got some good structure on it, a stop loss in place and all that?
Yeah, mate. Yep.
All right.
15%. So, yep.
Good stuff, Peter. Thank you very much, and Merry Christmas to you too as well, mate. Thanks for calling in. All right, Janine. Regis.
I do like this one, actually.
Do you like where
well
he's
done,
gotten in?
Peter, and I do like the entry as well. There's some really serious resistance there. It's broken through that, come back to test it. He's taken it through there. It's a nice little confirmation. It's now about being patient with it. I really get, the question, what do you think of this one? Because when it doesn't move on after you first enter and it's just had such a long run, you might be thinking, well, why is it just stalled all of a sudden? But this is pretty natural after seeing that rise that we've seen, because bear in mind it's come off these lows down here at $1.49 all the way to, it's already risen 87% as part of that run. Could it do it again? Yep. Just wait to see if it comes back to these levels to find support, and if it does, then just be watching your stop loss. But if it goes back above this prior high where you entered, then I think it could be a real gangbuster, this one.
Oh yeah.
And just looking at that rise up there, the next level of resistance or significant one's probably somewhere. That's the first one. The next one's somewhere up here at around $4 if it continues to go up.
Any thoughts, Pedro?
Yeah, it looks around that $1 level that it does hit those resistance levels. So around that $3 there, and then we've got that $4 over there as well. So I like it. I like that it's actually come off this whole area here, this whole congestion. A little bit worried that it is hitting its head around this $3 level. If it manages to get back above it, I love it. I think it could hit these highs there.
All right, fantastic. Now, before we wrap up officially for tonight and for the year, we wanted to say from everybody at Wealth Within, we wish you all and your families a Merry Christmas and a happy and successful New Year. And seeing as we're in the spirit right now, I'm going to get involved.
Hey,
I've had enough. But Janine, thank you very much. It's been a pleasure, doing this with you all year. I know we started in January. We didn't know where this was going to get to, but it's been a lot of fun. Pedro as well,
I didn't expect to see you in a Santa hat, but you finally removed your Grinch.
I did.
Good to see.
Yes, and 2024 highlights.
Amazing, hasn't it been, with the banks? To me, that was the big highlight, and going into 2025, just waiting for a bit of consolidation and to look at what happens in reporting in the first quarter, or after the first quarter, and then we could see a little bit of a pullback into mid-year and then off we go again. So I think it's still going to be a reasonable year and then a boomer into 2026.
Yeah, and Pedro, fantastic mate, since you've come on the show, great advice. You've picked some good 1 cent stocks. I'm sure everybody wants that.
That's it. Yeah, I hope that I was able to provide some value for the viewers. It's been a great year. Hopefully it's been a successful trading year for everyone. I know it has been for us, and we've enjoyed putting this together for everybody, and we always do, and we will continue to in 2025. So bring it on. That's what I say.
We just want to hear from more of you out there. What are the stocks? What are your challenges? What are your concerns? Write into us. Talk to us about things that you want to discuss. All things stock market, and whether it's currencies, commodities, whatever it is. As long as it's Australian, then we want to talk to you about it. But we do talk world sometimes, don't we?
Yes.
So we have to allow that. But we don't talk US stocks.
No, we don't. We do talk world. But yes, as Janine said, this show does thrive on all your support. So please do keep supporting us, maybe at Christmas. Recommend us to one friend moving forward in 2025. And remember to show your support for our channel and smash that like button. If you enjoy watching and want to see loads more of our content, click subscribe now. Subscribing helps others find our channel so we can help them too. Before we let you go, what was your favourite part of the show? Was it our hot stock tip, our topic for the night, or was it the way we're wearing these Santa hats?
Where's your ho-ho-ho anyway? I'm waiting for
Let us know by
Everybody
commenting
wants that,
below.
yes.
And again, as always, Merry Christmas, and thanks to all those who are watching on YouTube and Facebook. If you're watching on talkingwealth.com, stay tuned for more exciting stock picks, insights and strategies. We'll be right back with all that and more. Next year when we return, we discuss the best uranium mining stocks to buy now. Make sure you join us on January 21st at 7 p.m. Australian Eastern Time. If you love our show, remember to hit that like button now and subscribe to our channel, as this shows your support for the team that puts in the effort each week into bringing it to you. If you are subscribed, then you will always know when we go live and put up new content. As always, thank you for joining us for now. Goodbye, good luck, and good trading.